What can a Century 21 agent do for you? They open your home, solve your problems and pat your dog. They provide the service of a butler and the savvy of a business tycoon. Century 21 agents. Smarter, bolder, faster.
Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, the age-old discussion of removing negative gearing has been in the media again the last few weeks. Is this the normal annual rumour mill going around, or are they a bit more serious this time? As we head out of summer and into autumn, will that change the property markets? And would you buy a property with a $50,000 special levy, especially if it's actually already been paid by the vendor? Now, joining me tonight to discuss our stories is Charles Tarbey, Chairman and owner of Century 21 Australasia, and Tom Panos, Head of Real Estate Advertising at News Corp. It's always hard to get your words out at the end of the day, isn't it, Charles?
You're sitting in a different seat. But you're sitting in a different seat. That's the problem.
Exactly. Now, this negative gearing thing, we mentioned it last week, and you're ready for a 15-minute kind of monologue on it.
No. Is Bill coming on?
No, Bill. I don't know if you invited him, but no, it's just you and Tom.
He was in Perth. I almost missed him just by this much. Anyway. So,
negative gearing.
Well, look, I still don't subscribe to it because I've been listening to a lot of commentary on it of late. I'm sure that it could go through some changes. If you look at Canada's negative gearing, for instance, you can't deduct a certain part of it, but you can deduct part of it. But if you look at normal business practice, if I go out and buy any equipment, I pay interest on it, and I can use it for my business, I can deduct that interest, I can use depreciation on it, all in the course of business. If you're a property investor, it's a business. Well, what is so different?
Normal. Yeah.
What is so different? Why do you have to change that? It's like every other business you're starting to penalise. And I don't know whether they've worked it out. That if you start removing investors from the marketplace, which is what I think will happen, then all of a sudden that land tax issue, the government cleans up a significant amount on land tax. You're also penalising established homeowners because all of a sudden their homes aren't as attractive as somebody else's. And then the investor who buys a new property, well, once they buy, it's now an established property, then their ability to resell becomes an issue too. So I think you're penalising so many different people. It works, maybe relook at it, but I don't understand why it's such a big thing that has to change right now.
Tom, how many years have you been in real estate?
28.
And how many times have they said, oh, we're looking at negative gearing, or people have said it might be disappearing?
At least 12.
Yeah. So literally every couple of years. But do you think maybe this time it's getting a bit more serious? I mean, it's getting a lot more coverage these days, isn't it?
I think it's a little bit more serious because you've got both sides of the government that are actually saying things about it. I mean, it's not just the coalition. You've also got
all the share market traders, because it's normally them bagging it all the time because they want you to buy some shares
instead.
Fund
managers, share market, all the types. Sometimes they're sitting on people that sit on in here that are talking about other parts of other asset classes. But I agree wholeheartedly, like 1,000,000% with what Charles just said. Negative gearing, that's the word, but the basic principle is this, that businesses borrow money to grow. And all they're doing is saying, we're going to take this borrow money to grow, to help families grow their net wealth, and we're going to penalise them. But in fact, that's what every corporation does. And that is, governments do that. Governments borrow money to grow. And the plan is that you're going to do things that are going to help you move forward. At a later time, you're going to sell and you'll pay a tax on the profit. And I agree with Charles, and what he's saying is, what is the impact on house prices in Australia if they take it away? What is the impact on rents? What is the impact on people that use this as a strategy? There are so many ramifications, and I'm only concerned that maybe the decision is being made where both parties of politics are talking about it because they know that they can't get that capital, the GST 15% thing's gone off the table, and they start looking at other ways.
Well, one of the issues, Tom, is if they're both talking about it, whoever wins can easily say, if Labor win, for example, they can implement. If Liberal win, they can say, well, we can implement part of that because it's now on the table, you see. And that's the thing that concerns me most about it.
Because the bottom line with the numbers is, for every $1 million you've got in property, you're roughly going to get about 4%, so $40,000 in rent. But ultimately, it's going to cost you $50,000 or $60,000 in mortgages and land tax and the rest of it. So any other business, like you say, you're losing 20 grand by renting that property out to that tenant. And so all you're asking for is effectively a third of that back.
But why are they wanting to implement it? What has the Labor government said or given as their reasons for wanting to implement negative gearing or remove negative gearing? What have they said? Is it to do with impacting on? I thought I might have heard about it might slow down in terms of the prices. It might help reduce the impact it's having on price growth, and therefore help first-time buyers. I'm not sure.
Yeah, they've suggested that that people have got this unfair advantage of growing their wealth by investing in property and being subsidised by getting the tax breaks, and that's what they're suggesting.
But I say we're punting. It's like if you're buying a property over a 10-year period and it's costing you 10 or 20 grand, you're taking a big punt to say, I'm going to effectively subsidise the tenant by 10 or 20 grand a year in the hope that sometime in the future it rises in value. To me, that's a big risk.
Look, if you remove the ability for people to invest and grow wealth, which is part of the reason that people get involved, and so they're not going to be supported by government when they retire, which is a great thing. But if you remove them from the equation to a degree, then somebody has to provide housing. Somebody has to step up and say, well, OK, we don't have enough investors coming in, and the government's got to step in and start looking at providing housing. And we've seen, we talked about this last week, we've seen in the past where they haven't handled that exactly too well. And I'd rather an investor, private investor, who has their own house to lose on the line and make it work than a government department having control of that cash, where there's no accountability if it fails.
In the past, I've always thought that why worry about it until it happens? Because, as you say, you've heard about it a dozen times, I reckon it comes up once a year at least, is let's not worry about it until it physically happens. But let's just say the worst thing happens and they do kind of scrap it all out. What do you think the impact in the property market could be?
Well, I do. I think that a lot of people will move away from the property market because there's a lot of the incentive in there to want to buy. I don't have a problem with that because from a real estate point of view, you either make money when you're renting somebody properties or whether you're selling them properties. So if an agent's got a good balance of both rental and sales...
You're like a lawyer, you always make money.
Yeah, well, though, not as well. Not as well. I don't charge as much per hour. Well, at least... No, anyway, I'm not going to get into that debate. I'll get into trouble. The reality is I will remove that incentive. And I do think they're going to have to go and look elsewhere. I don't know where that might be. We talk about the stock market. They've really got to be focused on it or have great brokers doing it because that market moves quite radically as well. And if you're not on top of your game there, you can lose a significant amount of money. You really need to have good advisors there. Whereas real estate's simple. You know, you just buy it, you sit, buy an average home at average price, an average couple, keep it for an average period of time. You know, you can do okay.
Yeah. Now, Tom, you're at the auctions, you're seeing people kind of face-to-face every day, you're seeing the mood of the market all the time. Do you think there'll be pretty major effects if this does come out?
I do, Chris. And I think with real estate, movements happen in the market on a week-to-week basis. People are affected by bad news, and you can see that in open for inspection numbers very, very soon. Don't forget that the bank said that last year they were doing more loans to investors than to homeowners. We're talking about average mums and dads here being impacted, and I think the fact of life is, Chris, if it did go or if elements of it went, there would be less people that would invest in residential real estate as part of their growth strategy, 100%.
So, anyway, we'll have to see what happens. But let's talk about something positive. I hate this negative stuff. Sell us a property, Tom. What have you got hitting your papers?
So we'll start off with one in Queensland.
Yep.
Now, I can't even pronounce it.
I was going to wait for you to pronounce this one.
Yes, that was very intelligent of you
to pass it on to Charles.
To do that.
Oh, Tarbey.
Tarbey. Wow. Tarbey. So let's
Tally.
The first time it sounded like you got it. Owner is the ex-CEO of Asia Pacific Hansen Limited on 7.5 acres. We're talking of over 1,232 square metres of living space. A smaller second residence set away from the main house is fully self-contained. Resort-style pool, expansive areas, landscape tropical gardens, soaring ceilings with decorative cornices, LED-light features, windows, and I think that they've got a price guide here of 2.5 to 3.5. Go speak to Katrina Walsh.
So certainly interesting and certainly an amazing party pad. We've got to get to one of these days.
Yeah.
OK, let's jump to Glenhaven in New South Wales.
Yeah, so Glenhaven's, well, Charles would know this suburb, I'm sure, and this is promoted by David Choi. Price guide of $1,850,000 to $2,030,000. He reckons it's one of the best homes there in Glenhaven. 8 Hyde Avenue in Glenhaven. Elegant, formal, sun-filled family room, upstairs terrace, jacuzzi, Spanish marble island, generous bedrooms. It's got the ducted air, of course, and very close to the Tuck Shop Cafe and to the reserve there at Glenhaven and the buses. So that's on auction on the 5th of March. And as I said, a price guide of $1,850,000 to $2,030,000, 8 Hyde, Glenhaven.
Another wonderful property. Any thoughts,
Very
Charles?
nice. No, very nice.
Nice part of the world?
Yeah, it's a lovely part of the world. It used to be a new subdivision all those many, many years ago, and it's established itself very, very well. All the facilities have found their way there. Now with the new railway stations starting to go through the Hills District, right up through there, it's going to make it even better.
Yeah.
Great spots, really great spots.
And to balance the around the country, to make sure we've covered everyone, then Victoria.
Okay, got off the phone talking to Greg Cusack from Jellis Craig. So this property here has got a price guide of 1.2 to 1.3. Coburg's an interesting suburb because it's right on the fringe of the city, and this home's on the fringe of Brunswick. Now, Brunswick homes go for $1.5 million up, inner city homes, and this home is a true family Californian bungalow home, stunning throughout. It's got charm and character, but it's been beautifully renovated, and we're talking about a price guide of 1.2 to 1.3. And Greg Cusack, who's one of the leading auctioneers, he does his own auctions there, he's an agent and auctioneer. Greg said to me, Tom, the bottom line is families that want to be in the inner city of Melbourne, that can't afford 1.5 to 2 million, will look at something like this for 1.2 to 1.3 and have a nice home very close to lively Sydney Road and Coburg markets.
Sounds good. Wonderful. Another 3 great properties.
Thank you.
Now, we've got our summer jackets on. Charles isn't really kind of joining the team effort, but it's obviously we're going to get towards the end of summer and into autumn.
Yeah.
How does that change the property market?
Well, this year it's interesting because we've got the 26th of March, which is Easter. We're seeing compressed activity happening. Now, no one's going to do a lot of selling or auctioning on Easter Day. So what we're seeing is compressed activity. The 19th of March is going to be what I call the first Super Saturday of 2016. Expecting a lot of stock, but Charles will go through the stock levels later on. A lot of the real estate agents that I'm speaking to are saying that their volumes are lower year on year. They've been getting better, but they are lower year on year, and in many ways that's what's probably underpinned more energy in the market. Like November, December was tough times, Chris, but now agents are saying that they're actually getting decent results. I think that's got more to do with lack of stock than anything else.
And for you, it's change of season is like any kind of event, a good event to talk to a vendor about to get them motivated.
We used to talk about the seasons all of the time, but they seem to have disappeared. And again, we're seeing a bit more momentum when everybody said the Sydney market has slowed down. Now, it's not everywhere. It's not everywhere in Sydney, but it certainly is in the east and inner west. They're really great performing areas still. But as you push further out, it's weakening, and there's a lot more stock coming on in the outer suburbs. I think I was talking to you earlier on before the show about the difference between the east and the west in terms of, you're sitting in the eastern suburb of Sydney, you're sitting on a Greek island, you're sitting in Mykonos on the beach with the sun shining and a cocktail. Over in the west, you're in a war zone. You're literally in a war zone in some parts of that area. And it needs a correction, and that correction is going to be good for WA, but no seasons. It's just all about what's happening, supply, demand, and the way in which the economy is treating the
I was talking to Alex Waters in Perth, an agent, and he said to me that he's selling houses now for half the price. He's told me he had just sold a property for 300, and he said, I would have got 600 a couple of years back.
Massive change. Massive change. Well, we'll bring you the...
massive opportunity.
And massive opportunity at the same time as well. Well, we'll join you. We'll come back with the graphs after the break and see what the numbers look like. But join us after the break, and it will be time for Purchase or Pass.
What can a Century 21 agent do for you? They explain the market, love a good barbie and never drink milk from the carton. They do your homework, your legwork and sometimes yard work. So invite one over. Century 21 agents. Smarter, bolder, faster.
Welcome back to Your Property Empire. Now it's time for Purchase or Pass. Now, in our Purchase or Pass segment this week, we take a look at a potential investment that has had a very large special levy raised against it, but it's actually been paid by the vendor. So we've got a 2-bed, 2-bath unit with security parking in a block of 14. The building is located just 4.6 kilometres from the CBD and less than a kilometre to a university, hospital and the local shops, restaurants and bars. Now, the property is quite large at 94 square metres and features a second bathroom and a balcony with a bright northerly outlook. A special levy of $50,000 per unit was raised and paid by the current owner, but the work has not yet been completed and is due to be done this coming year to sort out some waterproofing issues and to repaint the facade. So, well, we'll start with the basics, Charles.
Yes.
What is a special levy?
Well, what was waterproofing for? What happened?
Yeah, something funny happened.
Oh, well,
Special levy.
You know, you've obviously got to raise if there are certain issues such as that, and they need extra funds. If the current funds that they have in place are not covering what they need, they'll raise it. We did a renovation in a foyer in Sydney in one of our office complexes, which I've got a couple of floors, and there was a special levy raised for that as well, so that we can make sure we could just do. No, it wasn't for any other reason other than beautification, for example, and everybody agreed on it, and we thought it would be good for the building. But you've really got to protect yourself too, because if the owner's already paid that, how do you know that the owner's not going to take that back before the money's spent, which they're entitled to do? You'd know that.
Indeed,
You do know that, don't you?
We'll go to some of the ins
Because
and
you
outs
bought
of
this
it.
place, didn't you?
So, Tom, with the special levies, how expensive can they be? I mean, you'd obviously see it at auction and stuff like that.
If you've got a strata plan that people have been contributing very little money, and because they've been contributing very little money, there's been no work being done, and then there comes a point where serious work needs to be done, you could actually have a big special levy. I mean, but on the other hand, if you've been contributing to a strata scheme at the average rate, you'll only get a special levy if there's an emergency, and that'll be, as Charles says, for funds beyond the normal. So I think it's an important learning that when you're buying a property that you get a strata report done and you can actually see how much money is in the sinking fund, and you can actually see what work's being done. Because if no work has been done on a property for 20 years, sooner or later work is going to have to get done. And if there's no money, you should be thinking that, hang on a second, I might be up for a special levy which no one knows about at the moment.
Why do you think they're called a sinking fund?
Exactly.
I'm just curious.
Well, it doesn't sound good, does it?
It doesn't sound
But
good.
it's a really good point, because so many people, especially first home buyers, will go and choose somewhere because it's maybe $500 a quarter normal levies, rather than maybe $1,000. Say, oh, this building's cheaper. But it's the false economy, because maybe they're not looking after it, that $1,000 would have been cheaper.
Yeah.
Absolutely. You know, it's pretty much what you're doing is, are you going to be... It's forced saving. To me, a special levy is forced saving. It's allowing you to be protected for a time that the money's going to be needed versus having to hear with a bad surprise.
Yeah. And these special levies, they can almost happen overnight, can't they?
Yeah, they can.
An AGM or an EGM.
Well, yeah, they can. And if you've got major issues, like some of the apartment complexes around the country have got concrete cancer.
Yeah.
And it becomes noticeable, or you're talking about waterproofing in an apartment above a certain apartment, it starts to cause problem. Well, they've got to do something urgently.
Yeah.
And they've got to vote. And generally, people don't want their property to fall apart. So you're stuck in that process.
So the two scary things I've heard about special levies is we've bought apartments where you suddenly buy an exchange and there's no talk about it at all, and miraculously the body corporate gets together between exchange and settlement, they suddenly put a special levy in, and then suddenly there's nothing that the new owners can do about it.
Yeah.
And to me that's fraud.
Was it the secretary selling you the apartment, was it?
Yeah, exactly.
Yeah.
But also I think in these cases where there's funds in, so if they put the 50 grand in, we've been told by solicitors that there's nothing to stop that owner taking it back out.
Yeah.
So it's then advisable to get the clause to say, well, I'm buying it in this condition with this amount of money in Strata. If you take the money out, then that's coming off the purchase price.
Yeah. And that's what you've done. So it looks like a pretty good apartment in any case.
So
for that price is quite low from where you're saying it is located.
Yeah, it's in Tom's neck of the world.
Something like that's very good price.
Yeah, I would say a purchase as well, because one of the pluses is you scare a lot of buyers when they hear this sort of stuff.
Exactly.
And that's a big plus because you've got less competition.
Yeah, so for some people it's a scare, other people it's a positive. So look, I'm generally a fan of special levies. Just like Tom says, it either means that they're looking after the apartment or they're actually dealing with expenses before they get more and more expensive. So I think it's a great sized apartment for the money, and so I'd purchase as well. Well, now it's time to take a look around the country and see what's been happening with the auction rates and clearances and new properties coming on the market. So
yes, well, Tom will be happy because he would be still a little bit busy. I think there was an expectation that the marketplace might be a little quieter and the clearance rates wouldn't be as high. And when we started the year with Sydney being well below Melbourne. But it's actually hit now. Sydney clearance rates were the best. They hit 77.2%. In this last weekend, and that's across the board. I think the eastern suburbs were certainly a lot higher. The average clearance rate across the country was 72.3%, and this time last year it was 77.3%. So it was better this time last year, but Sydney's performed better than Melbourne, and Adelaide came in at 69.9%. So they still had a good clearance rate as well. They're doing okay. They seem to be doing okay from that particular.
But it's funny what it ended up like, because in mid-December last year, is everyone was bagging, the media was bagging the market, saying, right, it's all coming off, and it's had a very good start.
Charles' your figures late November, December, Charles, had hit under 60%.
That's correct. In some parts in Sydney. Yeah. Well, at the start of this year, it was under 45%. 2 weeks ago, when Melbourne was up to 77, 78%. So Sydney's kicked back.
Now, please tell us there's some homes advertised for sale.
Yes, there is, and if you go across to New Zealand, where they were really needing some more stock in Wellington and Auckland, they've had a 3.1% climb in their stock over this time last week, which is pretty good. But here in Australia, we had a 2.96% climb over the previous week, and the previous week was also a climb. So we've had a few weeks now where the stock's starting to climb, and this is why. But it doesn't happen in some of the areas, as you know, where you do auctions. It just doesn't happen in eastern suburbs of Sydney, where there's a lot more buyers, always a lot more buyers, particularly in the low interest rate category that we have right now. Always a lot more.
So are you expecting more and more stock to come on?
Yeah, I am expecting more stock to come on. There's a few apartment complexes coming out of the ground as well, and I think there might be some residue there. We were talking about Perth before. There might be some issues there with apartments that may not come up to valuation that were pre-sold.
And could this negative gearing scare tell people
Well, of course it will, you know. Even elections do.
Yeah. Okay, what about rent price?
Yeah, Sydney negative 0.14, New South Wales negative 0.14, Brisbane negative 0.44, but the star this week was Tasmania. Tasmania had a climb of 1.18% in their rent increase over this time last week, and it's great. So we've just opened with the boys in Davenport, two young, very experienced gentlemen, so we're looking at their stats as much as we can now.
And just finally, the vacancy rates as well.
Sydney 2.02, not too bad at all. Melbourne 2.83, and over in Perth 6.24. So the clearance, the average was around 3.69%.
Wonderful. Well, it all sounds like happy times out there.
Still.
Charles Tarbey from Century 21, Tom Paris from News Corp. Good to see you guys. Thanks for joining us at home. We'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.